Hey everybody, Tom Bullington here again with Coldwell Banker Realty. Hope you're doing great today. Just wanted to check in with you. We're getting to be about mid-March of 2024. And just to give you an update on where the market sits today as we look into almost St. Patrick's Day, which is hard to believe. Seems kind of like we didn't even have winter this year. So I keep waiting for the big snow to come and it just never comes. So maybe in the next couple weeks we'll get a lot of snow. I'm not necessarily betting on it though. So this year's market so far in 2024 has been relatively slow. It's been slow for sellers, it's been slow for buyers. And why is that? I think probably the biggest culprit in all of this is the interest rates. The interest rates for a 30-year fixed conventional loan around 7% right now. It's been a little bit lower, maybe a little bit higher, but 7% as far as those interest rates. FHA and VHA loans, a little bit less expensive, but FHA and VA also have a little bit more requirements as far as what you need to do, especially to sell a home. There cannot be things like peeling paint or different code violations, things like that. The federal government obviously wants a good investment, and they are going to, there's a trade-off for that lower interest rate. They want a little bit more assurance that the property is not going to become dilapidated along the way. So that's why those federal interest rates are a little bit lower than the 30-year fixed conventional loans that you can get. Also 15-year fixed conventional loans too. There's adjustable rate mortgages, all of that, and cash too. If you're a cash buyer in this economy, more power to you. So what I always tell people is if they are looking to buy a home, go meet with a lender right away before you contact a realtor. We have lots of great realtors here in town. If you're more comfortable working with someone else, or if you have a good relationship with a realtor, that's what I would like you to do is go talk to the person that you've had that good solid relationship with, and make sure you have a great transaction experience. Um, if you don't have a realtor, at least give me a call or shoot me a text, the 651-402-6356 number. You can also email me here, tom.bullington@coldwellbanker, or I'm sorry, at cbrealty.com, and that will be the email for me. But definitely, leave me drop me a line here on YouTube or on my Facebook page as well, and we can get in touch. And I can tell you all about my experience and things like that. But the biggest thing I always like to do with clients as I'm meeting someone for the first time is just to get to know them a little bit. What are they looking for in a new home? If they're selling, what's kind of that price range? What's that sweet spot of what they would like to sell that home for? If they're selling, are they going to be purchasing something else? Or are they just selling it? We've had a number of people last year selling a home that was their parents. Their parents had passed away and they needed to sell their home. Just getting an idea of what they would like to sell that home for is a very good idea before we get going too far down the road. So if you're selling, lots of lots of market out there for buyers. There are not many homes on the market currently right now. So you have a low inventory. You don't have as much competition as a seller right now. Having said that, if you're a buyer, though, you're not going to have your pick of the litter, so to speak, as far as going to homes and having, 50 choices. It's going to be considerably fewer choices. Unless you're looking really at new construction, there's a lot more of new construction available than there used to be in the past couple of years. That's at a higher price point, of course, and you're going to be looking at higher payments perhaps than definitely if you're currently renting. New construction also in this market, in this economy, tends to be a higher price point. So $500,000, $600,000 homes, maybe some in the fours, but you're rarely going to see something that's not a townhome much lower than $400,000 here in the Twin Cities area. So your results may vary. If you're not in the Twin Cities area, it may be different. But here, unless you are in a townhome or a twin home, you're probably not going to be much below $400,000 in the Twin Cities. So, especially in the South Metro, Hastings is a little bit lower price point, Prescott a little bit lower price point, Red Wing. But if you're in the Lakeville, Apple Valley, Farmington, Eagan area, especially $600,000, not unusual for a new construction, at least in those communities. So that's kind of the summary of where we are with the market right now. Very low inventory, not as many buyers. And why is that? Interest rates. We're back to interest rates. People not wanting to sell their homes because they're at like a 3.2% mortgage rate. If they sell their home and they buy something else, especially in the same market, they're going to be paying almost a double of not a double payment, but a double of an interest rate. So with interest rates at 7%, let's just say you have a 3.5% mortgage rate. You do the math. That's double the mortgage rate. So your payments, your monthly payments are going to be much higher. And I think a lot of people are just kind of sitting where they want to go, where they want to be, and not selling right now. Unless they have to move out of town or they have a job transfer or something like that, there's not a whole lot of people just moving just to move, well, because they'd like to be in another neighborhood. A lot of people are staying put as much as possible. So that's bad news for buyers. The other bad news for buyers right now is, of course, the interest rates. If you are a first-time home buyer, if you're looking into an FHA loan, things like that, very limited. You're going to have to buy a home that is pretty well kept up. Like I mentioned, unless you want a townhome, you're not going to get the new construction homes for much under $400,000 as a new buyer, unless you have the cash, unless you have a high percentage down as cash, you're still going to have that higher payment. Now you'll ask the experts, whether it's Coldwell Banker or Keller Williams or EXP or whoever it might be, they'll say to an agent like me, they'll say, well, your client could refinance in 2 or 3 years. And, for me, that's true. That's true. The interest rates could shift, but they could shift higher also. And I don't like to have a relationship with a client where I'm forcing them to do something that they don't want to do. I'd rather have a client stay in their home currently or not buy something and save the money up. So then in 2 or 3 years, if you're a first-time home buyer or someone who is not able to afford a more expensive home, if you save up for 2 to 3 years, you're going to have that big nest egg available to put down on a home when perhaps there's more inventory, when perhaps the interest rates are a little bit lower. I'd rather have someone do that, to be perfectly honest, so I can sleep at night. I'd rather have people do that rather than go into a home that they can't afford, that they're eating noodle ramen every night. They can't feed their kids. They have to maybe do something else. They can't have a second car, something like that. I'd rather have someone be able to stand by 2, 3 years, whatever it might be for their personal situation, wait until they can afford a home before they buy it. Um, I know that's different than some realtors, but I like to be ethical and make sure that if someone is buying a home, that they can actually afford it and it's not stretching them so thin that they can't live their life. They just basically they're house poor. So I don't want to be that kind of realtor. If you want that kind of realtor, go with someone else. I'm going to be very honest with you and advise you to talk with your lender. Make sure the payments work for you. If the payments don't work for you, then don't buy a house. Don't sell a house. If you are going to buy something else, just stay put and save some money up. That would be my advice. So I know that's counterintuitive from a real estate agent, but I'm here to be your advisor and hopefully, like I mentioned at the top of the video, to be here with you through the whole process. And in future years, if we're talking about 5 to 10 years from now, when you're ready to buy something or sell something again, I'm going to be the guy that you call because I was honest with you and ethical and made sure that you did what was right for your financial situation, not just so I can get paid. Because there's always enough customers, there's always enough clients. I want to make sure I'm ethically telling you the right thing to do. based on your particular situation and where you are in your life. So anyway, that's just kind of saying my piece as far as the market where we are right now. Interest rates around 7%, maybe a little bit lower for FHA and VA, but there are programs out there as well for buying buyer assistance. Minnesota has some great programs for especially first-time home buyers and people that maybe have some economic challenges out there. So make sure you look into those, and any good lender worth his or her salt will tell you what those programs are. That's where I have a partnership with lenders where I will go to about 2 or 3 different lenders that I implicitly trust, and I will tell you, okay, let's talk to him, let's talk to her, sit down with him or her, nail down exactly what you want for a payment based on your particular situation. I don't want to know anything about your personal finances. All I want to know is, okay, what's your range for what your house is going to be worth, what you're looking for. So then we can go and look at homes. So anyway, if you have any questions for me, please feel free to give me a call anytime, 651-402-6356, on the web at tombullingtonhomes.com. You can email me as well, tom.bullington@cbrealty.com too. So until next time, have a great day.